is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott, here with Andrew Young. Andrew, we've circled around a lot of big themes that we think could define the next era for Web3. DeSci, decentralized finance, is one of the more exciting areas. We've had some great guests on the pod to talk about that. Decentralized finance, DeFi, obviously is something that really burst onto the scene in 2020, and we think could be due for a huge comeback or a second leg as the underlying infrastructure scales and becomes more performant as more institutions come online. And then probably the most exciting area, at least for me, is the intersection of crypto and AI. We've talked about how, AI agents can't start a business, they can't open a bank account, they can't sign a contract, but they can launch a DAO, open a wallet, send a transaction in crypto, sign a smart contract. And so often, if you think about it, like a lot of the most exciting AI applications intersect with crypto. Crypto is kind of the economic layer for that. But for any of these things to actually work, for DeFi to perform at or above the same scale and low latency and uptime as traditional markets, or for AI agents to be able to transact en masse by the billions or trillions of transactions, we need blockchains that work at scale, right? We need networks that can perform and that can handle huge workloads and can do so at low cost and low latency. This has been a story that has really defined, I think, the progress of the blockchain world for the last few years. Ethereum, in many respects, was kind of a victim of its own success. Fees went up and it chose a scaling roadmap involving layer twos. But a lot of these new emerging layer ones seek to address some of the shortcomings of Ethereum and some of those initial chains. Solana was the first to, I think, define this category, but there is a whole other crop of chains that are emerging that are kind of designed from day zero to basically be built for high speed and maybe even to be built to specialize in some of these specific areas. And that makes today's discussion really exciting. And it happens to be our 200th episode. Hard to believe we've been at it for this long, but we've covered a lot of ground. And I am probably more excited for this conversation than I have been for almost any other. And today we have Jeff Feng, who's the co-founder of Sei Labs. So Sei Labs is a high-performance layer one blockchain built for trading in DeFi. Jeff is a Forbes 30 under 30 honoree, a leading voice in data sovereignty and decentralized science, recently spearheading Sei Foundation's exploration of acquiring 23andMe to protect user genomic data on-chain. Jeff has a really interesting background. Previously, he was a venture investor at Co2. Co2 is really one of the most highly regarded, most sophisticated, most successful New York hedge funds that's crossed over into technology investing. And he also worked in TMT investment banking at Goldman Sachs. He holds a BS in business administration with high honors from UC Berkeley and is a partner at Sierrawood, supporting early stage innovation. Sei Labs is a contributor to the open source Sei blockchain, which is the fastest layer one network. Its unique chain level optimization enables decentralized exchanges and apps to offer the best user experience with performance and scalability, which is exactly what we've been talking about. They've got a great blue chip investor list and plenty of developers and lots of interesting applications as well. So Jeff, thank you for joining us and welcome to the show.
Thanks a lot, Alex. And I appreciate you both for having me on. It's quite an honor to be here for the 200th.
Well, thanks. We didn't know until our producer mentioned it at the very outset. If I knew you were coming, I would have baked a cake, as they say. But anyway, I started off by talking about this sort of scalability question in crypto in Web3, and would love to just understand from your point of view, like, well, first of all, maybe tell us a little bit about your background. Like, you came from Co2 and Goldman. Like, what would you say that you learned in the TradFi world that a lot of other crypto founders miss that led you to, develop and help launch Sei?
Yeah, I'll touch on a bit of the sort of early history of what my co-founder and I were building sort of before Sei, what ended up leading us down sort of this eventual path. My co-founder and I, Jay, he had spent almost 4 years at Robinhood, led out a big part of the crypto team, engineering team there. And one of the initial key takeaways that we had actually came out of the whole initial GameStop situation with Robinhood.
Yeah.
The TLDR. I'm sure for a lot of the listeners who have plenty of context is Robinhood without really any sort of heads up or permission from the users has shut off buys and sells. Like if you were holding the GameStop stock, you couldn't do anything as long as you had it on Robinhood. So you were sort of singled out as a market participant and almost restricted from your ability to fluidly move in and out of an asset. Obviously, created a lot of financial issues for a lot of individual users. But the thing that was the most evident to a lot of employees, others, was this big component of trust when it came to any financial institution.
Yeah.
And the initial idea of what led down the Sei route was building a decentralized Robinhood. Simply put, a application and a venue where users can transact, trade assets in a permissionless way. So without having to trust a single company and whatever their agenda was. Obviously, in Robinhood's case, with hindsight, we knew that they had almost a bit of a conflict of interest, right? A big part of the revenue came from a large hedge fund, and whether or not that hedge fund was in a good or bad financial state actually had a big impact on the corporate and the business and the revenue component of it. So completely separate from the interests of the users. So that was the initial impetus. Was simply just building a decentralized exchange, Robinhood, but on-chain, permissionless, fully trustless. What became pretty evident at the time, if we rewind back to scoping out a product like this, a trading venue that could scale one day to a Robinhood, even NASDAQ level scale, is you cannot actually build it on any of the current blockchains that existed at the time.
Right.
So if you looked at Ethereum and you looked at Avalanche and a couple of the other chains that existed all the way back then, it became pretty clear you can get started. And that's where a lot of the applications that popped up in crypto over the last 4 or 5 years. That's where they sort of the ceiling that they hit. They got started, but there was absolutely no way that they can scale when it came to the user experience. So users would either face sort of 30, almost a minute long sort of wait times. Most of the time, if you're using a lot of applications in your day-to-day, like a lot of the applications on your phone, it doesn't make a huge difference outside of the sort of annoyance. In finance, when you're trading, that can make or break a trade.
Yeah.
So when it became clear that you could not actually build an exchange, any sort of scalable exchange on the infrastructure that existed, that's what led us down the Sei path. Really building infrastructure purely built for trading digital assets. Now, I think a few of the things that helped us build conviction down this path was one, if you look at the number of products and the applications in crypto that have gotten true product market fit, they all revolve around the trading of digital assets. It's like some kind of digital asset. There was a period of time where NFTs were really popular. What did users do with NFTs? They traded. Back and forth, those sort of financial transactions and actually keeping record in a public ledger is the core product market fit of crypto today. A lot of other things are still in early experimental phase, but we know with certainty that has deep product market fit. So all of the major applications revolve around trading. If you look at stablecoins, which people talk a lot about having meaningful use case, it still comes down to transacting. You're buying something with the stablecoins, you are sending or receiving stablecoins, and that's what the public ledger is there for. So, if you believe that is the core product market fit, how do you address the scalability issue? And that's where we come to the simplicity of Sei. Take the best part of Ethereum, the greatest strength of Ethereum, which is the fact that everyone, from a developer standpoint, knows the language. It is like your modern day English when it comes to that level of network effect. When you think of the things in the world with the deepest network effect, it's like the US dollar, it's currencies, and languages. And it's very difficult to unsee English. In the same way, it's very difficult to unsee Solidity, the sort of EVM, basically what a lot of the developers and applications builders use on Ethereum.
Yeah.
The strongest part of Ethereum and the strongest part of Solana, which is a lot of the updated hardware, just using the same sort of compute that sits on yours and my computer today.
Yeah.
It's almost as simple as that.
Yeah. So interesting. Your story reminds me of another story from a different time in a completely unrelated business. And it's Shopify. I don't know if you know like anything about the background of Shopify. Like it's one of the biggest e-commerce platforms. But the founder of Shopify, Toby Lutke, originally wanted to sell snowboards on the internet, which is a far more humble start than trying to recreate decentralized Robinhood. But basically was incredibly frustrated with like e-commerce platforms at the time. So frustrated that he built his own to help basically make the app that he wanted work better, which is to say he wanted to build a storefront. And so he built his own software. And then what he realized is this infrastructure could be used for entrepreneurs in any industry, right? And it almost reminds me of like what you're talking about, which is you wanted to build a better Robinhood, and you realized, well, the technology wasn't there yet. So you had to build a better blockchain. And now that you've built a better blockchain, it's something that you alone are not the only user anymore. Anybody can use it, right? And it's like there's got to be countless examples of that where like a founder or entrepreneur was frustrated with how things worked, tried to create a better way to do it, and realized that the market for that was like much, much larger than just what they wanted to do initially.
Yeah, it's I like the Shopify analogy. I wasn't aware of Toby's sort of early starts with the snowboard business, but the idea of the only way you can really compete with as deep of a network effect in a company as deep seated as Amazon when it comes to e-commerce is to almost approach it in a decentralized way, empower every individual sort of salesperson, e-commerce person to build their own shop rather than just folding to the place where they have the least leverage.
Yeah, well, exactly. It's like instead of a monolith, it's a totally decentralized network with a common protocol, right, that connects everybody together.
Yeah, and then what Shopify sort of sits is that they'll handle a lot of the payments piece, Shopify Pay, and that's the kind of one of the ways that they are able to provide the most value between a lot of these individual sales folks. I'd say that probably wraps into one of the big takeaways from spending time in traditional finance and spending time at Goldman is you'll notice that every company and entity that gets to a certain level of wealth and resources, that one of the first things they do is hire excellent legal support. And what the biggest implication of that is a lot of their deals, a lot of the structures end up favoring the incumbent. That level of incumbency sort of favoring ends up being magnified generation after generation. So the older the industry, hence finance, hence real estate, the more deep-seated a lot of the incumbents get, is what makes trying to disrupt and provide alternatives and advantages to even the most well-built systems like NASDAQ that much harder. It's the same reason why all of the sort of obvious things that we can improve about the current financial system, something as simple as same-day settlement, has taken decades to really not make meaningful progress on that. That's what makes progress there so difficult, is because of that sort of the incumbency sort of effect. So I'd say that became most apparent from a lot of my time in finance. And one of the things that are a bit more refreshing about crypto and how quickly things can move, because there's less of that large incumbency. You'll see advancements move a lot faster, in the matter of a couple months or even a couple of years in crypto. So it's more of a more similar to actually the approach of Shopify than you and I would like to think.
Yeah, interesting.
Yeah, I think one of the things that's also really cool about Sei to me is that, like, when I first heard about what you guys were doing, it actually sounded almost like an app chain. Like it was like an order book focused on, I believe it was like you guys were working on almost essentially like an on-chain order book, which I think you guys actually still have like the decentralized limit order book. But then like over the years, I would say like particularly the last kind of like 6 to 12 months, you guys have kind of become like the hub for on-chain gaming. Like I was looking at DApp Radar recently, and like most of the top on-chain video games are actually on Sei, which makes sense because you guys have super scalable, incredibly cheap. But yeah, do you want to just talk a little bit about, I guess, from a business perspective, like how that kind of evolution from initially effectively almost like I said, like an on-chain app chain for trading to this like more generalized EVM chain with a focus on gaming?
No, it's I think it's a great question. When you look at Sei V1, like what was initially part of the first open source rollout of the protocol, there was an built-in order matching system. The idea was it's open source infrastructure that any sort of application builder or DeFi user can use. Some of the feedback that had come up as Sei as an ecosystem had grown, as more and more founders and builders had tried and experimented on building applications there, was the usage of the actual order book, that was the built-in order book, wasn't there. By and large, builders wanted to design their own order matching from scratch. So as long as the builders were strong enough, as long as the developers were able to really parse through exactly how they wanted to build their order matching system, they would actually prefer it to be a lot more custom built rather than just adopt a sort of single standard. As the ecosystem grew, the initial expectation for a lot of the builders and the application on Sei was very much financial. And one of the things that kind of the great positive surprises of how the protocol and the chain has gotten adoption over the last 2-3 years is we've had to redefine what we've viewed as financial transactions. It's not just DeFi. It actually expands to everything in crypto. Everything in crypto boils down to some sort of financial transaction. It is an asset that has some sort of ascribed value, whether that value is directly in dollars or whether that value is denominated in Solana or Ethereum. When you purchase a lot of things in crypto, you're purchasing not always with stablecoins. Sometimes you're purchasing it with Ethereum. So it very much depends and varies on what that sort of price and value is denominated in, but it's actually always denominated in some kind of token or an asset. So what we viewed as finance, what we viewed as DeFi actually expanded to much more than that. It expanded into NFTs. It expanded into social applications. It expanded into, and very obviously, gaming today. Yes, Sei is the largest gaming chain from a user-based perspective. And I think there's some similarity to, a lot of the times the initial operating system or the infrastructure that gets built in technology, the first big use case is not what the creators had intended on. Because we're sort of deeply, very deep in the weeds in finance. That's obviously my background.
Yeah.
Which makes me pretty susceptible to miss a lot of the other use cases that are begging to move over to on-chain and move over to crypto. Gaming being a big one of them. So if you look at a lot of the gaming transactions, what people do in games, a lot of it can be boiled down to just a simple financial transaction. So yes, the speed, exactly how cheap it is to use the same infrastructure compared with any other venue. This is actually one of the sort of big proof cases.
Yeah, I mean, it's basically anything. Anytime you need to move something of value, you need finality and you need it to be frictionless and peer-to-peer. And that can apply to just about anything, and not just money and financial assets, but titles and deeds to property, virtual assets in game environments, scientific discoveries, IP, even votes in an election. A vote is a lot like a transaction. And related to what you're saying, it's sort of like expanding your mind. Like a vote requires that when you vote, your vote is cast, that it's counted, that you can prove that it was counted, and that you can't vote again. It's kind of like sending someone money, right? It's really problematic if you can send the same dollar twice, and it's just as problematic if you can vote twice. So there's all these other, like, ultimately, you're absolutely correct. Like any on-chain transaction it is inherently kind of financial in nature. It resembles a transaction in money, right? And so, like, if you can optimize for that, you're actually optimizing for everything. Is that basically what you're saying?
Yeah,
Yeah.
exactly. That's addressing the sort of DeFi and the financial use case. Almost ironically expands to nearly all types of transactions, regardless of what people typically view as the sort of canonical financial transaction.
Interesting.
So what other so beyond kind of like on-chain gaming and on-chain trading, is there any sort of specific subsectors that you think are going to kind of like break out, whether on Sei or just in general on chain?
Yeah, yeah. I think what's been pretty uh, well understood at this point is crypto is particularly compelling for anything that has a financial skew. Gaming is one of those classic examples of a type of industry that benefits from having a sort of built-in economy and financial component. It can be a make or break for a lot of major games. And some of the best games, people don't just play because it's purely for fun. There is almost a sort of side economy for a lot of those games. You look at World of Warcraft, you look at RuneScape, a lot of the MMO RPGs,
Yeah.
part of Pokemon cards and the baseball cards. There is a financial component to it. You get the right card, and you can sell it for quite a bit of money. When you look at the other, how can you expand this to other industries that where the financial component and the economic component plays a big role? One major one that has gotten a lot more traction just over the last 2 years is agents and
Yes.
the greater usage of AI agents. When the one simple example of how AI agents can be used in a crypto context is when you're when you're a DeFi participant, there are a lot of opportunities you miss when you're sleeping. It can be trading opportunities. It can be event driven. It can be some sort of drop that a project or a team is doing that where you're not fully available. And also you have a team sort of ready to go 24/7. That's where a lot of these agents come into play. They can do a single action. They can notify or be ready to sort of purchase an asset based off of any given event. When they go about doing these tasks, there's going to be a lot of microtransactions. Sometimes they're working with other agents. A lot of these microtransactions, they cannot happen on a traditional financial payment rail
Yeah.
because it will have to include T+1, T+2 settlement. There's a human in the loop. You'll have to loop in banks. You'll have to handle all of the sort of stringent KYC and all of the existing sort of regulatory barriers versus just having an agent pay each other directly through a stablecoin. So that's one of the major use cases that we're starting to see more and more. One of the nice things is a lot of these agents are used by people globally, even outside of the United States. I think one of the things, the biggest learning experiences from spending time helping to grow out the Sei ecosystem is exactly how big of a use case crypto has for folks living out of Africa, out of China, out of Latin America, maybe people that aren't as financially well off or don't have as much sustainability in their own currency. They sort of are more incentivized to some extent on trying out, experimenting, being one of the first sort of alpha users for a lot of the new AI agents. So I'd say a lot of those sort of transactions end up falling on a much more of a global user base than even a lot of the typical sort of US user base that we're familiar with.
Yeah. Yeah, totally. I mean, it seems like the AI thing is the thing that interests me the most intellectually. And in my introduction, I kind of alluded to some of those things that you were referring to. It's not just the settlement time, it's the fact that if you believe that agents are going to be semi-autonomous or autonomous and are going to be performing all manner of knowledge work in the economy, running your social media, designing your website, designing an architectural plan, being a financial advisor, being a lawyer, and whatever, they're going to need a sort of internet native way to do transactions and to store value that they've earned and accrued, and maybe then to invest that money, right? And none of that can be done agent to business or agent to bank. It can only be done agent to agent with crypto. So it just seems like inevitable almost that these two technologies are on a collision course, which is interesting because a lot of people assume that the world of AI and the world of crypto are interesting but different and discrete from one another. But the reality is that they're both kind of integral almost to this future that everyone's imagining, right? But then it goes to, okay, well, that all sounds really great in a white paper or Twitter thread or something, but how does that work in practice? Well, the agents are going to migrate to the platform that's the most performant, and that's something I also think is really interesting, which is that human beings can be influenced by marketing plans and by KOLs and all this kind of stuff, but maybe the agents will just kind of choose the path of least resistance, like water flowing down a hill, and find the blockchain that allows them to do the most. I don't know, something to ponder.
Yeah. We recently had a conversation on exactly this topic, like what sort of dictates a big part of Sei's open source roadmap comes down to just the user experience. This belief that as long as you optimize for user experience, what also happened with traditional operating systems will end up happening with blockchains, where users will congregate wherever they have the best user experience. The thing we can sort of almost speculate on is how does that sort of user experience decision making happen with as more and more users are either replaced or sort of complemented with AI agents, where a lot of that decision making actually comes down to processing through a model. One of the ways you can sort of view that coming out is they are even more objective.
Yes, exactly.
Those extra couple milliseconds of speed arguably doesn't make a difference. It's hard for maybe even a lot of users to view. But like I said, like we know in finance, those few milliseconds can make a big difference, especially as the crypto industry gets more and more mature. The same type of effect will happen as you see today in high frequency sort of equities trading. So those few milliseconds and all of those sort of advancements that Sei has made will end up, I think, making a big impact in how a lot of these AI agents will make their UX decisions.
Yeah, it is interesting. A lot of people are talking about how like AI agents could be like the new front end for trading. Like I was recently watching.
They could definitely be. To me, they could be the new front end to like mass adoption of crypto, like the new front end for wallets and private keys and seed phrases and all this other stuff. Like to me, that's always been such a gating factor for mainstream adoption. I mean, it's one thing to sort of speculate on some NFT or own some virtual assets or whatever, but if you want to be if you want to make everyone Web3 native, you need to make it easier to be Web3 native, and that's always struck me as like something that could help to smooth the path.
Yeah, exactly, and I think Web3 and crypto posing and really being the financial layer for a lot of the things and the experiments that happen in AI, particularly make it more timely.
Yeah,
I'd say one of the big questions that people in the crypto industry ask is, when do we move past speculation? So much of the industry today is built on speculation, is built on trading assets. When do we start to really see meaningful use cases sprout from beyond that? I think one obvious one, and we're major proponents of, like we mentioned before, is gaming. Sei today represents over a third of the entire Web3 gaming industry. So it is a sort of market share that you can't actually really even see in DeFi and most other sectors of crypto. And then a second big one is most certainly going to be a lot of the experiments we're seeing in AI.
interesting. I had no idea that it was a third of all. So when you say a third, is that like a third of all on-chain transactions in Web3 games, basically? Or is it a third of all Web3 games just kind of taken as a whole? I'm not sure there's a difference between those.
Yeah. It's unique active wallets.
Oh, okay. Yeah.
So from a user perspective.
Yeah. Fascinating. So,
Yeah.
in the intro, I talked about this amazing thing like 23andMe and DeCi, and I feel like we have to address that because it's such an interesting thing, right? So, I mean, you know the background better than I do, but my understanding is 23andMe, this hot Silicon Valley, based startup, raised a lot of money. Everyone thought it was great. Everyone gave away their genetic data to this company, and then a few months ago, it went bankrupt. And all of a sudden, it was like, oh my God, like millions of people's health data, genetic data, is like a part of a bankruptcy proceeding. Like if it ends up in the wrong hands, people could be denied coverage. It could be a privacy issue. It could be like a massive problem in so many different ways. And like that is a really interesting example of the centralization problem that you raised, right? Which is that it really sucks when you can't execute a trade because the order book's been frozen on some stock because the company's interests are different from the user's interests. It's even worse when you're denied health coverage because someone bought your genetic data and realized you had a pre-existing condition or something, and now you're going to die or something like that. Like, so it's one of those interesting things where in science and finance and other areas, the centralization problem is a big issue. So tell us a little bit about that story and like how close did you actually get? Like, what was your thinking around that? I'd love to understand that better.
Yeah, yeah. You alluded to a lot of the right points. Like when my co-founder and I had first found out about the 23andMe situation, there was very much a sort of almost a element of PTSD with a lot of the whole Robinhood GameStop situation. You have large company with very clear financial interests, not always perfectly aligned with the interest of all of their individual users. This is a picture perfect situation where 23andMe had ownership on all of this user genetic data and the trust of the users they had gotten it from.
Yeah.
But financially owed creditors needed to pay back a lot of the folks that they owed, a lot of the entities that they owed money to, and you had this board that was compelled to make the right financial sort of fiduciary decision. I'd say that was the sort of initial reaction, and once we started digging into the actual sort of business, once we started digging into what were the potential products and the ways that blockchain and crypto could actually complement a business like this, that's where it started to get particularly interesting. I'd say one great example of this is a project called WorldCoin, which Sam Altman had initially gotten started with, and now they've really been firing on all cylinders. One of the core sort of complements for Web3 to a lot of traditional businesses is in creating a new incentive structure.
Yeah.
And that's where the token component comes into play. If you're able, the idea behind WorldCoin is if you give everyone a token, that almost serves as a sort of first level to a potential UBI. Something that folks can continue to transact in, something that from day one becomes almost like a global currency that folks can rely on. That I think is a really interesting experiment. Fundamentally, what it gets to is it at least serves as an incentive for people to contribute their biometrics data, which is the core data set that they collect today. They have this sort of org product that just scans your retina and a couple other biometrics information. So can you build almost that same type of company and product, but focused on creating an open source repository of genetic data or health data? Maybe you start with genetic data, but you actually expand into just human health data, and you ensure that that data is used and can be used by a lot of different companies rather than just being gate kept by one large pharmaceuticals business. Obviously, if Pfizer or a large for-profit business gets their hands on that data set, it is in their interest to keep it for their own drug development purposes.
Yeah.
It almost becomes that sort of competitive advantage. But if you can offer it to the broader community of drug development companies, is that an easy way to really help push the forward for a lot of the progress that's being made in health? So I'd say that was the sort of just a bit of a precursor on some of the product ideation and really the excitement that the team had built around it. In terms of the actual progress, I process. I don't know as much of the specifics, but what context I do have is there are definitely a lot more bidders when it comes to large companies and competitive sort of bids than folks at the foundation were expecting. So, one of the things that certainly changed about the process was just how large the bid got. I think it quickly became multiples and multiples over what at the time 23andMe was trading at.
Yeah. Well, it would have been amazing. I mean, maybe you'll get another kick at the can at some point, or someone else like you, because I actually Jeff wrote a book many years ago called Blockchain Revolution, co-authored with my dad, and in that book we talked about how blockchains could help to revolutionize the healthcare system many years before the concept of DeCi was coined. And it was all around this idea, basically, that today data exists in silos and there's not an incentive to share that data. And that there's also more data outside of the silos than inside of the silos, but there's no incentive for individuals to volunteer that data. So what if you could create like a data commons where individuals have permission, can give permission to access anonymized versions of their data? That would be a way, to put more control in the hands of the patient or the person, allow them to monetize something that belongs to them, and then also puts more useful data into the hands of more groups, which would encourage more scientific discoveries. Because as you point out, companies are disincentivized from voluntarily sharing data between each other. So can you create a combination of a pooled resource that has permissions on top of it, that gives users incentives to provide access? And 23andMe, I mean, I'm wondering how that would have actually worked in practice. Like you could have, if you had all the users, you could have like set them all up with a wallet and then airdropped the data as a token or something. Like I'm not even sure how it would work, but then like it'd be like you're empowered now with this information. And do with it what you want, and then maybe find some companies that want to kind of bid on that or collaborate on that. Anyway, it's such a cool concept, and like I said, maybe not this time, but maybe sometime.
You wrote the book?
Yeah, Blockchain Revolution.
Yeah, I mean, I think it's incredibly prescient because it's now even more relevant with the sort of data race that's going on when it comes to continued progression of a lot of the large model companies.
Yeah,
model companies grow based off of like a larger access to public data.
So true.
And meanwhile, as it becomes more and more obvious that data is now the fundamental company advantage.
Yes.
Before it became like, this is like a helpful potential mode. Perhaps it's like a revenue stream. Now it is becoming more and more obvious that basically every company that the data that their users contribute is actually the crux of the company. As that becomes more apparent, more and more companies, particularly we've seen, their MO is to shut off all scraping, all sort of access to their data. The data that Reddit users contribute is by all means Reddit's data, and no one else can really get access to it. And I think that's one of the sort of interesting ways that there's an application building on Sei that I'm particularly excited about. And kind of the goal there is to incentivize users to collect a lot of the data that they contribute from their mobile phones. Historically been very much probably arguably the biggest data silo of all time.
Yeah,
which is just Apple and their closed sort of ecosystem on iPhone. Really targeting and trying to open that up so that data can be used to inform models. And a lot, I think today the big use case is still to be sold to a lot of the model companies.
Yeah, absolutely.
Yeah,
I can keep going. Andrew, do you want to jump in here?
No, I was just saying the project that got me most interested in crypto early on was Basic Attention Token, i.e. Brave browser, because that idea of allowing users to sell their browser history to then essentially allow firms to target them with ads, but then getting paid for doing that, kind of similar to what you're talking about. Like it's like an alternative data stream, something that currently 100% of that value goes to Google. So ways to essentially give people value just for creating data. So yeah, I think it's interesting. I mean, I guess, how are you guys, is that something you guys are kind of looking into in terms of like, because I would say we're still very, very early into like the on-chain data side. Like I haven't really seen any projects besides kind of like Ocean Protocol, which has been working on this for a long time.
What about Sapien? I mean, they're doing like data labeling. I don't know if you know those guys.
Yeah, I don't know if they've launched yet though, but like there's not like, it's pretty interesting because I would have thought this use case would have already blown up when I first got into crypto 7 years ago, but it doesn't seem like anyone's really cracked it yet in terms of, I know there's a couple, I saw like some project called, I don't know, okay, it's all over the timeline right now. I think that's what you're talking about, selling like your photo roll data or whatever. Yeah. But yeah, I mean, it's just, I guess I'm curious, like why hasn't that use case really, really taken off yet, given that it's something that people have sort of talked about for like a very long time at this point?
Yeah, I wondered the same thing. I'll try to put some specifics around it. So the whole cross section of data and blockchain is an idea almost like as old as Bitcoin. So for a very long time, people have wanted to figure out ways. Oh, why don't we put data on chain? It's a way where we can sort of make it permissionless, trustless, easy to access. So one sort of early iteration of this that absolutely did not work out is healthcare data. Taking like Epic and all of the sort of siloed healthcare data and moving that on chain. My current understanding and my gut is that the actual core use case of putting data on chain doesn't quite exist. There is no actual reason to put data on chain. It works perfectly fine and can be used from like a AWS S3, just wherever we store data today. Instead, the actual intersection that is particularly interesting is how crypto can incentivize people to contribute data. Basically go through a user experience or a sort of methodology of contributing data that otherwise they wouldn't have done. So basic attention token is a perfect example of that. It is a browser that, when it comes to, if we were just to create a browser company right now from scratch and offer people up a way to contribute their data, it would be very difficult to do so. There isn't enough of an incentive to get them past sort of the early user barriers. Having a token, having that serve as an incentive, having that serve as some sort of way for users to interact and gain more value from contributing their data, that is the most interesting area to experiment today. But the actual use case of moving data on chain, I really don't think is compelling quite yet.
Interesting. Not yet. Because I think the insight on 23andMe and patient, like genetic data is such an interesting one, where users have more sovereignty. And then, as you said, like if data is the most important, it's such a cliche, like data is the most important asset class or data is the new oil. And it's like people said that about the Web 2 era because companies were using data to sell ads. And now it actually is true because data is the thing that goes into training model, like to train models. And that actually makes it the most important asset. So the cliche, like the thing that was sort of consultant speak is now actually a reality, but for totally different reasons. But, to have user sovereignty over that seems like such a cool thing. Anyway, just to quickly move on, I know we're running out of time here, but tell us what do you sort of see coming down the pipe for you guys? Say the chain is launched, the token's launched, you're seeing huge uptake in certain areas, Web3 gaming being one that we've discussed. What are some other things that you're excited about, like in the next year or so for the protocol and for Sei Labs, what you guys are building?
Yeah, I think, it's always the hardest the hardest milestone for any early ecosystem in blockchain to get its initial sort of critical mass of users and assets on the chain. And most projects that attempt to do so never get to sort of this stage. When you look at both the domination that Sei has in gaming users, which end up expanding into broader usage as well. Like a huge part of crypto users today actually turn out to be users that start in gaming, and then that's sort of their wedge into expanding into DeFi. So I think contrary to probably a lot of Western beliefs, particularly in the US, it's quite difficult to get a person to from zero, like no crypto or Web3 experience, to just start throwing their money on chain. That sort of trust component. So gaming ends up being by far the sort of best early on ramp. It served almost the exact same trend as what Solana did with NFTs. When you look at what was the precursor to a lot of the traction that Solana has in terms of usage, in terms of trading assets and financial applications today, it was actually NFTs. That was the initial sort of, that's what got a lot of the users on board. That's what got them comfortable. That's what got them to build the trust and the familiarity with Web3 enough for them to actually put their own assets. Otherwise, making that jump directly is incredibly difficult. It's almost impossible. So I'd say that actually plays a big role. For Ethereum, it was actually ICOs. Funny enough, that whole ICO 2017, 2018 period, a lot of it was denominated in Ethereum. That was the sort of initial sort of game almost that got a lot of users onto Ethereum before DeFi really took place in 2020. So I'd say one thing for a lot of analysts, just a lot of folks, when they're looking at predicting and anticipating which crypto ecosystems really rise, the thing to pay much more attention to is what is that sort of initial wedge and on ramp. And usually the on ramp looks more like a game than not.
Yeah.
I'd say today the TVL and total amount of assets on Sei is well over 500 million. So there are enough assets where for any sort of certain key applications that really take off, that build that sort of user trust, it's easy for those applications to gain meaningful traction. So the big goal for Sei in the ecosystem today is to continue to bring on excellent founders who will build great applications that users can use and will pull in even more of a new user base. So a lot of the big areas that I think are particularly new and exciting, you'll probably notice that the Sei Foundation team takes bigger swings, let's say, than a lot of sort of other L1s like Solana. A big part of that is because the team is earlier. That's just the role of a lot of early startups, is to take those kind of bets. Science is a big kind of new upstart category. Robotics is a very new one. It almost kind of intertwines with a lot of the new things that are happening in AI. Space is an interesting area to experiment a lot more in defense. Is becoming more and more relevant. In terms of some of the specific applications, that's one of the things that we're continuing to sort of ideate around. But those are, I'd say, some of the brand new categories. But really what underlies all of them is going to be finance. That's going to be the thing that Sei will sort of forever be focused on and known for, is making it as easy and as cheap as possible to do financial transactions. And, we think that's going to lead to a lot of different new categories.
Yeah. Well, and as you said, like a lot of other categories are kind of finance in disguise, right? Because it's all about transactions. So, Jeff, that was such an amazing discussion. Thank you so much for joining us. Really interesting to get such a broad sense of everything that's going on in Sei and what you're thinking about. Really interesting 200th episode for us. How far we've come, Andrew, since our humble beginnings. But can't imagine a better way to kick off this next chapter and to celebrate a milestone. So, Jeff, thanks so much for joining us. Jeff, just before we go, where can folks kind of like learn more about Sei, follow what's going on, use the platform, tell us more.
Yeah. A lot of the latest and greatest you can find on the Sei website, sei.io, just looking through the blog, and the Twitter at Sei, SEI Network is the best place for the most up-to-date information. The foundation just sort of over the last couple of months has opened a large office in New York, and that's very much going to be a big hub for a lot of new founders, a lot of the new investors that are spending time in that city. So for folks that are stopping by in that city, don't hesitate to hit people on the team up.
Awesome. That's it for this week's episode of DeFi Decoded. I'm Alex Tapscott, here with Andrew Young. Thanks for joining us. Make sure to like, share, and comment on the podcast wherever you get it. It helps other people find it. Until next week, take care. Have a good one. See ya.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.